Good evening. This is Let's Talk About It, a bi-weekly discussion by the Closed Private Investment Network, where we talk about a different topic and how it affects the Black community. I am your host, Michael Evans. I am also president of the BNIC Network, the sponsor of the Closed Private Investment Network. And before we start today's discussion, we're going to start first and foremost with the disclosure, um, the disclaimer. Um, so the information provided in this discussion is strictly for educational purposes only. Members and participants are strongly encouraged to consult with licensed financial advisors, attorneys, and tax professionals before making any significant financial decisions or investments. Though I do have decades of business experience, I am not licensed or registered with any regulatory authority. And the next thing that we're going to do is we're going to watch a short introductory video about today's topic of private market access.
Ready to unlock private wealth? Let's explore Michael C. Evans' game-changing framework for retail investors.
Seriously? Why are everyday folks like us totally missing out on massive early-stage company gains?
Big institutions grab the massive upside way before an IPO. We're literally showing up late to the party.
So how do we actually bridge this massive gap? How do we access private giants like SpaceX?
Getting true institutional-grade access means navigating 4 highly fragmented and, honestly, pretty confusing pathways.
Crowdfunding, public vehicles, and alternative platforms, they all have totally different rules, minimums, and wild risk levels.
Watch out for the premium versus NAV-olution. Crazy retail speculation can completely wreck fair pricing.
Going in blind, you're exposing your hard-earned cash to 5 invisible, totally structural risks.
You literally have to evolve from an isolated retail investor to having guided institutional-grade access.
Here's the missing bridge. We finally have the access tools, but we completely lack collective education. Enter CPN. It's a cooperative ecosystem built so we can safely leverage these private markets together.
Communities organizing their capital, education, and ownership early will gain huge long-term advantages here.
Ready to claim your seat? Head to the CPI.network today to master private markets together.
All right, so let's jump right into this short presentation about private market access for retail investors. So in the video, it talked about retail investors being late to the party. And that really has to do with the fact that private money gets to invest in private companies early in their development stage. And so when we look at private companies like SpaceX, OpenAI, Stripe, Anthropic, Databricks, these are private companies, some of which are going to IPO here extremely soon, and they will be worth upwards of $1 trillion plus. And at that time, when they do an IPO, initial public offering, that's when the average retail investor will be able to get in. But by that time, the valuation of these companies has run up extremely high. And so you're catching the tail end of the valuation versus the beginning of the valuation, which is when the company is private. And in this day and age, most companies stay private longer. There's not as big of a rush to go public because private companies still have access to private money, mainly through private equity and venture capitalist funds. So how do we as retail investors get access to these companies before they go public? Well, there's really four different ways. So the first way is through publicly traded vehicles. So these are exchange traded funds and closed end funds that trade publicly, and you're able to buy shares in them. There are crowdfunding platforms where you can invest in startups through Regulation CF as well as Regulation A plus. There are some private investment platforms. Um, those are focused mostly on real estate. And then there are some venture and private credit funds. Um, CPIN would fall under a private investment platform. And then there's tokenized investments. These are blockchain enabled fractional ownership, and this is relatively new. Now, these platforms, they require different minimums. So for public vehicles, it's just buying shares, and it's usually a minimum of one share. They're pretty liquid, but they usually have extreme volatility. Um, and they have an NAV, which is a net asset value, um, which reflects what their underlying value is, but what they trade for, they may trade significantly um, above their NAV. Crowdfunding platforms such as StartEngine and Republic and Wefunder, they generally have low minimums, $50 to $1,000, but you are going to be in for the long run because you are getting in on the very ground floor. You are usually getting in at the pre-seed level. And so your investment is extremely illiquid, and it may take decades before you're able to access the value. And you're going to experience a very high failure rate with pre-seed um, startups. Then there are alternative platforms, Fundrise, Realty Mogul, Yield Street, where again the wide range of minimums from as little as $10 to as much as $5,000 more. The liquidity profile is medium to long term according to where the platform or fund is investing as far as the investment cycle. They usually don't do uh, startups in the pre-seed phase. It's usually once once the companies have been generating revenue, probably still not profitable, but they tend to invest around Series A and afterwards. Um, Still illiquid, and the valuation is subjective because there generally aren't any public financials to go by. Now, when you're investing in a fund like Fundrise, for example, you have to look at the difference between the premium and the net asset value, the NAV. The NAV is based on the actual underlying value of the company that are in the fund, whereas the premium is based on retail speculation. Um, And so I've got the example of two funds, VCX and DXYZ. Both funds experienced massive price surges driven by retail speculation, resulting in significant premiums above their actual net asset value. So I invested in the Fundrise Innovation Fund when it was private, and they were offering to the public. It's very much like the US VC fund that we've been talking about here the last couple of weeks. And I invested the minimum, $10. And I want to show you what that $10 is worth now. So my $10 investment from less than a year ago is now worth $232.75. This fund went public, I think it was back in March, and the price per unit varies each day because it's tradable, and it looks like it's not going to pull up the graph. Let me refresh the screen and see if it pulls up. So you can see the volatility. But they went public. When they went public, the price per unit was at $111, and that was back in March. As of May 21st, the price per unit is $289. I don't even own a full unit. I own 0.8. But the value has gone up, man, more than more than 20 times. And now I regret only putting in $10, but I was experimenting to see what it was like. But this is the type of access that you can get to, preferably while the funds are still private. And then when they go public, they will hopefully trade like crazy, like this one has. But let's go back to our presentation. Now, there are risks in investing in private markets. So the number one is illiquidity. You're going to lock up your capital for years. The earlier that you get in, the more that you can make, but the longer that it takes. And it's a higher risk of the startup failing. It is risk number 4. So illiquidity. This is not one where you can pop in and pop out unless you're investing in publicly traded venture capital funds. Number 2 is the valuation risk. This is where the private asset can be highly subjective because there's no public market discovery. You're going 100% based off of what the company may tell you. So there is always the risk that you're overvaluing, overpaying. We've talked about the premium risk, especially with publicly traded access vehicles. Startup failures. Statistically, the vast majority of early stage startups do not succeed, right? Venture capitalists do not invest in early stage startups. They invest in startups that have proven revenue streams and that they believe have sound foundations. And even then, they still have a high number of failures. But they are betting that the ones that succeed outweigh the ones that fail. And historically, that's true. And then there's regulatory risk. Um, the the legal frameworks and the rules for private markets continue to evolve. And under this administration, I think that you're going to see those rules become more flexible. I think you're going to see more venture capital funds that are private being offered to retail investors. I think that's going to be a trend, and they're going to have low minimum requirements. Again, the one I invested in was $10. The one that we've been talking about for the last couple of weeks is 500. So you need to be aware of the risk. And this is a long-term investment. It is not short-term. So now that the door is open, right, between ETFs, crowdfunding, tokenization through blockchain, there's now access to substantial generational wealth, but you still need education, guidance, and collective community to use them safely. So you can, of course, go on this journey all by yourself, but I recommend that you do it in a supportive environment like CPEN with other people that where you can get continued education, like what you're getting here, where we can talk about other people's experience, get some guidance, and just get some community collective support. So the structural trends is that public and private markets are permanently blending, right? Private ownership has high upside, long-term growth. Public liquidity allows for price discovery as well as retail participation, and your ability to go in and out of an investment. And then we add on blockchain infrastructure, and the whole financial industry is going big on blockchain, both public markets and private markets. And so that's going to add another layer, especially through tokenization. And so this is a unique time where these three circles are converging. And so this is where, the closed private investment network comes in. We provide financial education where, every other week we have the Let's Talk About It discussion where we talk about a different topic that affects the Black community economically. We have our Knowledge Center where we have more than 40 courses that you can access online. And so we truly believe that an educated investor is able to understand risk better, is able to tolerate risk, and therefore is able to is positioned to interact with these higher risk private markets. Private market access. We do provide access through our investment opportunities to through our investment opportunities to early stage companies. So we have one investment opportunity that is specifically targeting a early stage company that is doing a pre-seed capital raise. That pre-seed capital raise is traditionally targeted toward accredited investors with a minimum investment of $25,000. But through CPEN, we've made it where, with as little as $100, you're able to pull your money together with other investors in order to get in early. Um, the community capital formation. So whether it's um, investment clubs or the special purpose vehicles, we create legally compliant entities that allow you to participate um, in these private markets. And then collective economic empowerment. Again, having private discussions, the networking. So CPIN is building a cooperative investment ecosystem to safely navigate, access, and leverage the private markets together. Um, so CPIN, um, again, we have our knowledge center, educational courses, community forums, investment discussions, member directory, networking opportunities, investment opportunities. If you're not already a member of CPIN, I will put a link in the chat where you can go to our preview page, check us out. You can join for free and have access to the beginner level of our knowledge center. And upon passing the essential lessons courses, which is 3 courses, take about an hour, you can be designated as a sophisticated investor, and then you can have access to the investment opportunities. With that, that is the end of my short presentation. And so, questions, comments, let's open it up for discussions. Anybody have experience investing in the private markets? Tim, I am sure that well, Tim, you have experience with the private markets, or are you mainly a public market person? Tim, can you hear me? Okay. Um, Leroy, what did you think of the presentation?
And the presentation was excellent. I have had experience in what I thought was the private market, and I did not have enough information from the group that I was dealing with, so it didn't work well for me. So I'm glad to be connected with CPIN, with the education, and others attached to it. Yeah, great presentation. You laid it out well.
So you do have experience in dealing with private markets. You didn't have a good experience, but knowing what you know now and knowing what you've learned here in CPIN, what are some of the things that you would have done differently?
Well, I would have done my research to, number one, get a chance to know and talk to the person, similar to what we are doing here, versus a text, an email, or whatever. I have learned the hard way that unless I can see someone face to face, ask questions, do my due diligence, uh, I would not engage. I, I would not put my money into it unless I can see the person, talk with them, get a clear understanding, and do the background check on them and their experience.
Yeah, due diligence is critical. You know, in the class, how to evaluate an investment opportunity, um, we talk about risk and due diligence is where you discover risk and then you evaluate the risk, right? You peel back the layers of the onion. And in CPIN, we attempt to assist you with that due diligence and trying to do a lot of the heavy lifting before we bring you investment opportunities. Um, but we still recommend that each person do their own separate due diligence on the investment opportunities that we present, right? So, we have a specific process that we go through. Um, we look at, you know, tens to hundreds of different investment opportunities, the majority of which I pass on because they don't pass the due diligence test. So due diligence is extremely important. Go ahead, Tim.
Yeah, sorry about that. I had to step away for a second. Listen, my only concern with investing in private companies, even though they can give you the best return ultimately, but in my experience, when you go looking at the private company, all the due diligence in the world, you still got to know that you're about to lose. You may lose everything. I mean, you don't have enough information. Uh, there are no safeguards. I prefer public companies because at least even with those, they have problems. I know I'm working on a 10K now. I'm doing one myself, and the stuff I have to think about, what do I include and what do I keep out? So I don't make the company look bad, but also at the same time tell all the truth. So just getting the information is just so difficult in a private company, and I appreciate the fact that when you say look somebody in the eye and talk with them and shake their hand, that's good. But there are a lot of hustlers. We got a lot of, and our people, we got some great hustlers, and most of them you see every Sunday. So when you go to church, and they know how to get their money, right? So, and all they're doing is promising pie in the sky by and by when you die. So, it's difficult. Like I said, I appreciate anybody. You have the tools here. CPN has the tools to give you a lot of knowledge and a lot of information. But man, it's still such a gamble. And I would be looking at the public deals a lot easier because you can get into it directly. Nobody can stop you. You can buy one share of stock of a public company, and that one share of stock allows you to be able to go and speak at the level of the CEO. You can actually say to the CEO, "Hey, I'm a shareholder," which means they got to pay attention to you. I've done it. I've attended meetings with major corporations, and and they didn't like it at all. They said, "Well, how much stock do you own?" I said, "That's not your business." I'm a shareholder. That's why I'm here. I have my right to vote. I have my proxy, but I have some questions, and so you can come and ask a lot of questions and get real information and hold their feet to the fire, and in those situations. That's all I'm saying about private investment. Private investment is just like I said, it's a tough world, and you better think that if I'm going to do this, I might as well lose all of my money when I put this in here, or overfund it and put part of the money into something else that save your principal, and put the rest of that money you can lose so that you will get your principal back down the road, maybe 10 years from now. But at least you do that kind of thing, overfund it, in other words, so you can get your money back. So that's my 2 cents about it. It's difficult. I don't care how smart we think we are. Private companies are a difficult process, and and you don't know some factors in there. They can have you hung up for a long time, and I can tell you some bad stories. When a CEO's wife bankrupted, got mad at him because she thought he was cheating, and froze every one of his accounts. And now he couldn't even go to the meeting. He couldn't fly to the meeting. He couldn't do anything. And oh, by the way, he had us all at the hotel, and he was paying for us to stay at the hotel in New York. And his credit card went bad. And he didn't know why. And I had to pay for my room when he was supposed to be comping me my room and my trip, all this good stuff. And the man at the hotel said, "I'm sorry, Mr. Holly. Do you have a card? Because your guy doesn't have a card anymore." so, so
Wow.
that's private people. That don't happen in public companies. That's those in private companies. Anyway, sorry about that. I'll tell you long stories.
So you are 100% correct, right? Um, investing in the private market carries a lot of risk. And one of the risks is the lack of price discovery. When you're investing in a public company, you've got analysts that generally cover that company and make recommendations: buy, sell, hold, accumulate. Uh, and the companies are required to file financial statements that you get to evaluate. So there's more information, right, with a private company, especially an early stage startup, which is um, extremely risky. Um, there may not be any operating history. You may be funding an idea, and the earlier you are in a startup's um, phase, the greater the risk. But by the same token, the greater the risk, the greater reward, um, though you may have to wait a long time because private companies are staying private, and there may not be an opportunity for you to, sell your shares or share the part of the equity that you have in the company. Um, so a compromise to that are these publicly traded venture capital funds. So these are professionally run funds that invest in startups, again, usually at the Series A or higher. So they're not taking on all of the risk that's associated with a startup at the pre-seed or even seed level. They're investing in companies that have generated some revenue, that have a path, um, and they're investing in companies at typical stage that a venture capitalist would get in. And let me be explicitly clear. The venture capital business is a very profitable business, and it's profitable for a reason. It's because the due diligence that they do, and they match risk to reward. And so even if a venture capital's portfolio, 50% may fail, that other 50% that succeeds more than offsets the failures. And that's why they're successful. That's why rich folks keep investing their money through venture capital funds. And so if you can find a publicly traded venture capital fund, um, that gives you the best of both worlds. You then get in where accredited um, where accredited investors get in, because a venture capital fund that constantly loses money won't be in business long, right? And so you are going to do your due diligence on the people that are running the fund, the performance of the fund. And so when we did our presentation on the US, I forget the name of it, um, the the USVC fund, I think it is, um, that has invested in OpenAI, invested in Anthropic, and in SpaceX. Um, and they have a relatively small portfolio. I think they only had like 7 companies. But I received an email from them this week that they just made another investment into the bank called Mercury. And if there are any business owners here, you've probably heard of Mercury Bank, because it is the fastest growing business bank in the United States, geared towards startups. It's had an incredible growth spurt over the last couple of years. And so this publicly traded venture capital fund took an investment, a private investment in them. And so I recommend that if you want to get started in private investments and you're weary of the risk, look at investing in one of these publicly traded venture capital funds. Their shares trade like stock. So you can buy it one day and you can sell it the next day for whatever reason that you need to get out. They're very liquid. Now they have a lot of volatility. I wish I could have been able to show you the graph of the one that I'm in, but I mean, just in one day, since yesterday, its price went up 17% in one day, and it and they tend to trade on news rather than the fundamentals of the companies that they're actually invested in. And so, but I think that in this day and age, most people need to have exposure to that. It's according to what your risk tolerance is, which will dictate how much of your portfolio you allocate. But you've got to follow the money. And right now, the money is going into the private markets, and the private markets are making rich people richer. And as retail investors, we now have the opportunity to where we can get in on some of the same deals that accredited investors get in on. Go ahead, Leroy.
Yes. This afternoon, I was listening to the news and they mentioned something about SpaceX IPO, and I knew that you had mentioned something about SpaceX 2 weeks ago, and may have been something in the print about tonight about SpaceX. So now, where are they? Have they already gone into the IPO? What stage are they now?
Yeah, so I think today they released their financial documents pertaining to the IPO. And Tim, you probably can explain this better than I can, but when a company plans to go public, they do a filing with the SEC. It could be a public filing, it could be a private filing of their intent to go public. But prior to actually going public, they have to do disclosures. They have to disclose their financial information as well as what exchange that they're going to be listed in, and how much money are they looking to raise. And so that's what came out today was the public information concerning the SpaceX IPO. I don't know if there's a specific date set. I think it's targeted to be next month. And I didn't spend a whole lot of time going through what they were saying about it, but I know that one thing that they said was that SpaceX, their financials are showing a loss. So they're still losing money, but people are going to buy SpaceX stock, not on where they currently are at, but where they are projected to be. And this is really buying into Elon and his ability to create successful businesses. So that's the information that I have about SpaceX.
Well, you want
Um,
to find out about these companies like SpaceX and everything. You can look them up. Yes, they file what they call an S1. It's a registration statement so that you get to know about the company. But really, what you want to find out is, and you get it through the news and stuff like this, are who are the investment bankers who are going to take it public? Who got the mandate to do it? Once you find that out, you call that investment banking, that firm, you can speak to the retail person, not because they won't put you over to the investment banking side, but you can speak to the retail person and say, hey, SpaceX, you guys are running the mandate. You're running the book. That's the words. You're running the book for SpaceX. I want to get some of that. Let me in. Now the guy who's the person who's the retail broker, they want to get you in because they're gonna make some money on you. So they're gonna try to go to the investment banking side and say, "Listen, I got a client. They need to get in. You got to bring them in. They're small, but let them in, please, because they know they're gonna get a commission. And also, too, they will be acknowledged by the investment banking side, something that they don't ever get. They don't because the guys who are retail, all they get is they get a sheet that comes out on Monday and says, sell these, sell these, sell these particular products to your customers. Get to working. Make your cold calls. All that good stuff you see on the movies is really true. That's the way they pull it and do it. So anyway, I was just say, get that investment banking firm's name. Call up the retail person and say, I want to get access to this thing. Let me have some of that. Well, what you got? I got $10,000. Oh, that's kind of small. They're looking for more than that. Hey man, that's $10,000, and I got other friends. And then you tell them, and oh by the way, I got churches that I know, and I might bring some big money. Then they really start acting crazy and give you everything. But if they think you could tap into a million or two, man, they will go crazy for you. They will kiss your feet. They'll take you to lunch. So find that party who is the investment banker. And once you find that out, um, that's where you're going to get in.
great, great information. Um, Anybody else have any questions or comments or experience in dealing in the private markets? Sally, do you have any experience in dealing with private markets, like through your old investment club? Sally, can you hear me? She must be away. Um, Chuck and Sandra, glad that you can join us. Um, just curious, do either one of you guys have any experience in dealing with private markets, investing in companies while they're still private?
Can you hear me?
Oh, okay. Yeah, we can hear you now, Sally. Sally? Sally, we heard you for a quick minute, but now we don't hear you anymore. While Sally's trying to figure out her communication situation, Sandra and Chuck, either one of you guys have any experience in investing in the private markets, private companies?
Well, I actually was in VCX before it went private, but I didn't go in I didn't go into it thinking it was going to be a private market investment. Actually, it's because my son who was like, you know, Fundrise was something that you could get invested in without this whole set of money back in the days. Like $500 or whatever. So he's gung ho on real estate, and he wanted to find his own little ways of. So he did Fundrise, and then Fundrise along the way had that innovation fund that then became VCX that we see these days. So I didn't even go in that way. but no, not directly investing in private companies before they IPO, more like other private market investments that would be like, say like a company like a private equity fund has different things that they're bringing to opportunities that they're bringing, kind of like I guess what you do with your community or whatnot, and they're bringing stuff to the market like, hey, we have vetted this, and we're investing $1 million in this, and we're just collecting from the community whatever, and so 20,000, 10,000, 5,000 here, and is going directly into that private market opportunity, but not necessarily a private company that is private before going public, if that makes sense. Hopefully that answers your question.
So just for my clarity, did you say that you did invest in Fundrise?
That's correct.
Okay, and so you want to tell me about your experience with that?
So what I was saying is, like, we started that really not because of even they didn't even have an innovation fund to begin with. I got into it because my son, who was a teenager and was hell bent on he wants to go into real estate, and so Fundrise was our way of, or his way of getting in with his little money in Fundrise, and then Fundrise along the way not only has this real estate equity fund, they suddenly had this thing that they called an innovation fund.
Mhm.
And so if you invested in that, like you could like the real estate equity fund piece that you had, you could be like, hey, I want to put $1,000 in the innovation fund as well. So they'd move it over, or if your contribution for that year, your Roth IRA or whatever, was you wanted to put it directly into the innovation fund. So it was not something that they were doing in the past. They just kind of started doing it over the last several years. And I guess it did so well for them that they decided they're going to go public.
Mhm.
So we were invested in a bit of it prior to it going public, but it wasn't a bet on us going into a private market opportunity. That wasn't, it just happened along the way. And we were like, okay, well, I guess we're here for the ride-ish.
Yeah. So I also invested in the innovation fund for Fundrise. I did it as an experiment. I invested $10, and I showed on the screen earlier how that $10 is worth $250 today, and over a 20 times increase. Um, and um, I did understand that I was getting access to private markets. I didn't fully understand how this private fund would work, right? I was of a mindset, hey, let me just throw $10 in there. And I totally forgot about it. Wasn't until last week when they notified me that it had gone public and for how me to access it. When I went and looked at the account, it had grown to what it did, and now I'm like kicking myself. I should have invested more than $10. Um, but you know, I use that as an example of retail investors getting access to venture capital funds that are private, but they offer them to retail investors. There's not a lot out there, but there are some out there. And so I recommend, if people are interested in the type of returns that venture capital funds generally generate, is to either look at these um, private venture capital funds that have access to retail investors, um, such as USVC, I think is the one that we've been looking at the last couple of weeks that has invested in OpenAI, Anthropic, and SpaceX. Um, or you can wait until one of these um, public venture funds goes public. Um, well, that's VCX, right? That's the private public venture fund going public. And then once it becomes public, then it trades just like stock. You can buy it and sell it. But there is one that we had a special members only meeting about, which is a private public venture fund that has access and has invested in they actually had invested in XAI, which then, you know, merged with SpaceX. But they also invested in Anthropic and OpenAI in their early days. And so they opened up their fund to um, see um, they opened up their fund to retail investors with a minimum of a $500 investment. So um, and Sally has been communicating in the chat because she's having some communication problems. But she says she's interested in finding out if we as a group will be looking into international investing with a Nigerian IPO company, Aliko de Jote, chemical or cement companies. He has he also has a major oil company has built in Nigeria, is looking to build another in Kenya, Tanzania, Uganda block. Yeah. So um, I connected with someone in the diaspora who is building a private investment network specifically for the diaspora, where we have access to invest in early stage African companies. And so I've been evaluating them and talking with them. We'll probably look at onboarding with them within the next couple of weeks. And then, as opportunities are presented on that platform that I feel um, meet the investment grade criteria, and after we do our due diligence, I'll bring some of those investment opportunities over into CPIN. Um, and present them and see if there is interest in them. And if there's enough interest, then we'll create an SPV for CPIN to invest through this other platform. And this is where I, talk about the innovations and the opportunities. There are more and more of these platforms that are popping up, and some are very targeted. So, like this one is targeted toward um, early stage companies in the diaspora, whether it's in Africa um, or in other countries, but that the companies are led by Black founders. So, we'll definitely be bringing you more information about that. Um, Chuck, um, did you have anything that you wanted to say?
Thank you, Mike. No, no, I didn't. I heard you ask in reference to experiences with private investments. I've had so many businesses of my own that needed money. I had to, I had to fund myself. I've helped a number of smaller companies with resources for funding, but not on the scale that we're speaking of tonight. But I thank you for the opportunity.
Okay, no problem. Um, and so I am a member of the 10K project. And if anybody has heard of that, I think Sally is a member also. Um, but and we've been members for several years. It's a group of Black retail investors, and what they do is they allow early stage companies that are raising money through crowdfunding platforms to come onto their platform and to pitch to their members. They used to be extremely active. Within the last year or so, they haven't been as active. Um, but we're not the only ones out there that are thinking about applying cooperative group economics, right? Pulling our money together in order to support Black companies, to support creating generational wealth. And that's what this is all about: giving you the information, giving you the education, exposing you to the strategies that rich people have used for decades. And now, because of technology and some loosening of the laws, a lot of these strategies are now available for us. Um, are there any final questions or comments before we close? Go ahead, Leroy.
Yes, back to SpaceX. Does CPN plan to do additional research and possibly, if it see that it meets the test, this becoming one of the options?
So we're not looking to directly invest in SpaceX, but we did present the opportunity for CPIN members to indirectly invest in SpaceX by investing in the private um, venture capital fund. I referenced it in the presentation. Let me go back and see if I can find the name of it. I don't see it. But it is the USC. You know what? Hold on real quick. I'll just look on the website. Did someone hold on real quick? You can see it is the USVC Venture Fund. USVC Venture Fund. And so that is a private venture capital fund that is allowing retail investors to invest with a minimum of $500. And so we held a private members only meeting discussing that opportunity and seeing if there was enough interest to among its members to create an SPV. I know that Greg had expressed some interest and another person had expressed interest. Um, but I did not receive enough interest at the $500 level, because the minimum amount was that I had said was $50. And so if there was enough interest among several members to where we could invest at least $500, then I would create the SPV and then we would invest in this fund through the SPV, but there wasn't enough interest.
Yes, I was one of them. And I got tied up with a lot of other projects and did not get a chance to respond, but I am and was and am interested in that.
Okay, so best thing to do is to shoot me an email or give me a call after we finish here, and we can talk more about it. And I can let you know the level of interest that I have received so far to see if we reach the goal.
Okay.
Any other questions or comments before we end? Well, go.
Thanks, Mike. Very good.
Well, I want to thank each and every one of you for your attendance. I hope that you were able to gain some valuable information from this presentation. We're here every other Thursday, and we'll pick a different topic and discuss how it affects the Black community. Meanwhile, stay safe and stay blessed. Good night.